Today I want to reveal or re-reveal my secret to my investing success. It's actually not a secret since I am transparent on this channel and have shared it several times. I hope it helps many create a profitable and quality portfolio of stocks. The secret is simply my strategy through my quality checklist that I use before buying any stocks. On this channel, we are an investing family, so I feel I want to share my tips that have been essential to my financial success. Plus, at the end of the video, I want to provide my take on this whole potential cage match between Elon Musk and Mark Zuckerberg. Yes, you heard that right. First, let's look at my portfolio performance and see how I'm doing. Right now, I'm in the green 7.86%. Really, not much has changed. The market was up earlier this week and last week, and I was above 10%, so it's gone down slightly. The only real change is my international ETF is down in the red 0.5%, but everything else has stayed in the green that has been green or in the red that has been red. Now onto my quality checklist, which I feel has been instrumental in my success as an investor. Here it is. And what I'm going to do is go into each of these points, but there are 6 main points: solid financials, good management team, positive brand recognition, products and services, the moat, and a good valuation. These are all things that must check my box before I buy a stock. There can be some exceptions, but overall, it must meet all these 6. First, we'll talk about solid financials. Now, you've seen this before. I created the stock facts label myself, and to me, this is the first initial look at the financials of a company. So it shows the price per earnings, cash flow, revenue, gross margin, return on equity, debt, and dividend information. So if I like what I see based on this stock facts, which is a quick, effective look, then I go beyond and I look at the financial statements, which can tell a lot more about a company financially and its history of performance and how it's doing currently. But even then, I go beyond and look at forecasting. What does management forecast in the future? All this comes into effect with deeming this company has good, solid financials. And this is one of the items that must check the box for me. Then we look to see if they have a good management team. Are they balancing the interests of all stakeholders well? So we're talking shareholders, customers, community, financiers, suppliers, etc. Some companies will focus only on the shareholders and they leave out the customers and the community and so on. And really that can drag down a stock and give it a bad reputation. So are they meeting performance measurement goals? Are they making smart investing decisions that generate strong returns? How well are they running the business? I like to look at interviews of senior management, statements that they provide. Of course, I look at the performance of the company, etc. This all is an item that I consider when buying a company, is if there's a good management team. Next, I look at, do they have positive brand recognition? Is their product and services recognized by consumers and respected as a leader in its industry and one of quality? A good example is Apple products. It can't be denied that they offer superior quality products compared to their competitors. Apple is known as the leader in its industry, and customers are strong advertisers of their products and services. They love the product and service and are proud to say that they do. That's what I look for because I believe that creates staying power and growth. So positive brand recognition is what I look for, and there definitely could be negative brand recognition, which is not a good thing, where someone says, yes, I know that and I hate that product. So you want to look at overall positivity with that. Then I look at the products and services the company offers. A lot of people will blindly invest into a company without even knowing what they do. So I like to look at what they provide, and if they have a vast, healthy ecosystem that makes it more likely customers will own or pay for multiple products and services over time. Again, Apple's a good example. You buy the Apple phone, you're more likely to buy the Apple Watch, Apple TV, so on and so forth. So do their products and services create a dependency that customers can't do without and will use their products and services over and over? Again, Apple, Amazon, and Microsoft are probably the 3 best examples of this. Amazon is all about making it convenient for customers. And I find myself wanting to go to the store to look at products, but I always end up going I might as well just order on Amazon. It's so much easier. I don't have to leave the house. It saves me time. And sometimes, most likely, it saves me money. So yes, does it create that dependency? Will you keep going back? Also, subscriptions, beautiful subscriptions. An example of, first of all, subscriptions provide reoccurring, dependable revenue. If it's a good business model, the subscriptions that they're providing, that people will pay for it and keep paying for it. So let's look at Netflix versus Paramount. Which one offers the better subscription in your opinion? My opinion is definitely Netflix. Absolutely, no questions asked. They have superior offerings. They have the quantity and quality of movies and shows. They have such a big library and they have a lot of good quality stuff. They're very user-friendly, they're innovative, etc. And they're the only streaming service that is profitable. So there's the proof. And that's an example of a company where people are going to pay for that subscription and most likely keep it. And that is dependable revenue. So regardless, I look at the products and services and that helps me determine if this company or stock that I'm buying is of quality. Then I look at the moat. Do they have a clear competitive advantage creating an impenetrable business? Are they a monopoly, a duopoly, or a triopoly? To me, if you're towards the top, you are doing things right and dominating in that space and most likely to keep dominating. Because if you're that high up, you're generating probably massive revenue, cash flow, profits to keep staying on top as you reinvest that money in different ways, do R&D. There's just so much advantages to being one of the top contenders. Are they hard to disrupt or replicate? That is part of that moat. Zoom is an example where they're easy to replicate and disrupt, whereas Microsoft would be hard to replicate and disrupt. Essentially, could I more easily compete with Microsoft or Zoom? You bet it's going to be Zoom. I wouldn't want to try to compete with Microsoft or recreate or duplicate that. So also, are they a diverse, successful business and not a one-trick pony? So do they offer multiple diverse services and products that are industry leaders and growing in their respected space, or do they offer only one thing that their entire business depends on, the success of that one thing? That's not what you want to invest in. So Apple, for example, they have many different products and services that are highly successful and growing. Recently, they just announced their new VR headset. Apple would absolutely be fine if that VR headset was a complete failure. They have so many other things that are going right for them and producing lots of revenue that is just okay at that point if they venture and take a chance on something that they don't succeed in that. And that's what you want to see. Does a company have room for some failures? So the moat is super important and one thing I definitely look at. Lastly, is this company at a good valuation? You can buy a company and it's overvalued and not really the best time to buy. You want to buy when it's undervalued and at a good valuation. Is it a company that is historically at or below its average financial metrics and measurements, yet still financially strong and growing? Are the fundamentals of the company still strong, but maybe fear has crept in and is not deserved because it's an industry-based fear and not a company-based fear? I see this happen a lot where something happens within the sector. Let's say financials recently with the banks, but there's still some good solid banks that just got brought down with it. That's a good buying opportunity, right? Especially if they hit all 6 of these quality checklist items. I said this a few times. Microsoft is a buy at $2.90 or below per share. That's the good valuation based on its historical metrics, such as the PE ratio, the price per operating cash flow, etc., versus its future expected growth and performance. Right now, it's in the 330s. I do think it's overvalued and not a buy. But when I said it was a buy at $2.90 or below, I did have some people kind of mock me and say that's still too expensive. But look where it's at now, and I think you look as a long-term investor, you got to take things in context as well. So these are the 6 things or secrets that make up my quality checklist, which is the main component of my overall strategy. To me, it encompasses low risk yet high performance. I highly encourage you to create your own strategy and quality checklist, as I feel it is essential in investing and becoming wealthy. It has made a huge difference for my performance once I started following this quality checklist. Please share any bits and pieces of your strategy with this investing family of ours on this channel, because that's what we want to do. We want to lift each other up. Recently, I released a poll asking where your portfolio stands related to performance. Are you in the red? Are you in the green? By how much? 22% are in the red and 78% are in the green. This is great to see. But if you fell in the red, don't think you have failed. All investors are at different parts of their journey, and newer investors, for example, may be in the red as they don't yet have that compounding growth effect. Also, this is a great time to learn and improve, which is the point of my video showing you my strategy through my quality checklist and encouraging you to create or revisit your strategy and ensure you make it to or stay in the green with your portfolio. On this channel, again, we are an investing family, and therefore why I shared my strategy to provide an example of how a quality strategy can help you be a better investor and provide a higher probability of long-term gains, wealth, and passive income. It is never too late to start, and again, I want to open it up and ask you to share your best advice and strategies for others to see and consider for their own investing journeys. Always make sure to create your own strategy though, and never copy and paste someone else's, as that is not the way you learn and grow. It's also okay to evolve over time, but be sure to stay true to your goals and knowledge. Don't emotional invest. Create that strategy so you stick to it. Before I go, I must put my input on this Mark Zuckerberg versus Elon Musk proposed cage fight. Of course, Elon Musk is the CEO of Tesla and Mark Zuckerberg of Facebook. So Elon tweeted jokingly about a cage fight with Mark Zuckerberg. Mark Zuckerberg accepted this, and Elon mentioned that it should happen in Vegas. So who knows if this would happen, but it would be quite an epic show. Maybe it'd be lame, I don't know, but let's look at this as far as these individuals. Let's look at their personal stats. Elon Musk is 51 years old, about 6 feet in height, and about 200 pounds. Mark Zuckerberg is 38 years old, about 5'7", and about 155 pounds. Now, Mark Zuckerberg has recently gotten hooked on martial arts training. He has been doing Brazilian Jiu-Jitsu for about a year, and there is some footage of him doing some mixed martial arts training as well. Now, Elon Musk described himself as a bookish kid. The billionaire said, though, that he studied karate, judo, and Brazilian Jiu-Jitsu in his youth. Of course, he's a lot older now. He also, I believe, currently wrestles, and last year he said that he managed to throw the world champion sumo wrestler at a party. However, the experience caused him to slip a disc in his neck. So there kind of is a foreshadow of things, which makes me believe that Mark Zuckerberg would win the fight due to his youth and training. Elon's only advantage is his side. So I want to ask you, who do you think would win in a cage match between these two? I think this is kind of fun to think of. Do you think a win or loss would affect the company and their stock price? I sadly do, as a lot of investors get emotional and will relate this fight to the stock. In my opinion, it would be more embarrassing if Mark Zuckerberg lost to Elon Musk, where Elon Musk, it would be expected if he lost. So Mark Zuckerberg and Meta would have more to lose here, and is it worth the bet like with the metaverse for Mark Zuckerberg? Would investors lose faith in Mark Zuckerberg if he lost to Elon Musk? He does run a social media empire, and that would trend massively and could negatively and temporarily hit their stock. And it's just how it is, and how I think Mark Zuckerberg, a loss would go for him. He would be made fun of for the rest of his life, that's for sure. I think Musk and Tesla would be fine regardless if he wins or loses, because it's going to be looked at least he tried. So we shall see what happens here. But with that said, that's all I have for today. Thank you guys so much. Be sure to subscribe. Have a great day, and we'll see you next time on Mark Arnold's Finance.